Maybe you've had a CCJ, missed a few payments, or even had a bankruptcy. Does that mean that you can never get a buy-to-let mortgage? No, of course not. But there are a few things that you do need to know. So let's get straight into it. First, let's do a quick refresher. What is a buy-to-let mortgage? A buy-to-let mortgage is designed for somebody who wants to buy a property and let it out for other people to live in. It's different from a standard residential mortgage in the fact that the mortgage lender will put more emphasis on the rental income that the property will generate as opposed to looking at your own personal income. But your credit history will still play a big part in this. So how does bad credit affect your buy-to-let application? Bad credit can definitely make it harder to get a buy-to-let mortgage, but it's not impossible. So here are some of the ways that it can impact your mortgage application. Higher interest rates. Yes, it is true. Having bad credit can mean that you will be offered a higher interest rate. Does that mean that it's always going to be higher than if you didn't have bad credit? No, it doesn't. But in general, if you do have bad credit, you can expect to pay a higher interest rate than if you didn't. More rental income required. Mortgage lenders will do things called stress tests, and I'm not going to bore you with the details of this, but basically what it means for you is that sometimes with bad credit mortgage applications, the stress test can be a little bit harder to meet, and that means that sometimes the mortgage lenders will want to see a slightly higher rental income. It can limit your options, even though there are lots of lenders out there who are comfortable with bad credit on a buy-to-let mortgage application. There are also lots of lenders that are not. So in that regard, it can limit your options. The typical types of bad credit that a buy-to-let mortgage lender can accept: missed and late payments, defaults, county court judgments, debt management plans, IVAs, and bankruptcies. I will add that with IVAs and bankruptcies, generally speaking, these will need to have been satisfied for at least 3 years. There are always exceptions to the rules, but these are a couple of types of bad credit that will be scrutinised heavily. Does this mean if I've had any of these types of bad credit that I will definitely be accepted for a mortgage application? No, of course not, and that's not what I'm saying. Any mortgage lender will want to understand details around your employment situation, your income and your expenditure, and with a buy-to-let mortgage, there is also an expectation that you will have around a 25% deposit. On occasions, you can get away with a little bit less, and there might be occasions where you need a little bit more. The mortgage lender will also want to know specific details about the bad credit itself. For example, when was the bad credit registered? So when did it happen, and has it been paid back? And the golden rule here is, if it's been paid back, generally speaking, it's going to be viewed more positively, and the longer ago it happened, generally speaking again, this will be looked on more favourably. Okay, so you know how the bad credit might affect your mortgage application, and you also understand the different types of bad credit that the mortgage lenders might accept. So what you're probably thinking now is, that sounds great, Josh, but who's actually going to do it for me? Well, I'm glad that you asked, because I've actually gone to the effort of picking out 3 mortgage lenders who will consider types of applications like this. And just so you know, I'm not making it up, I even pulled some information from their website to share with you now. So the first lender that we're looking at, Vida Home Loans, and if you just have a look at the screen here, we've got a nice table just demonstrating that they accept defaults, county court judgments, they're looking at even secured payments that have been missed, which is mortgage payments. And they're even saying that they can accept repossessions, even though it's over 6 years old, bankruptcies, IVAs. So what this table clearly demonstrates is that they do accept these types of applications, and it gives you a good indication as well of how much time needs to have passed and what different types of products that you might qualify for. Okay, so the second lender that we've got is Precise Mortgages. So if we have a little look at the table on your screen as well, again, it just demonstrates the types of bad credit that they can accept and that they are prepared to accept people who have had incidents such as defaults, county court judgments, even mortgage arrears. So the table that you can see on your screen and the page that you can see on your screen here, it just shows you how long ago that needs to have passed and the different types of products that you might qualify for. And the final lender is Kent Reliance, and we can quite clearly see there's a table here showing the different types of bad credit that they will consider, how long ago that needs to have been registered for. You know, you can see here defaults, CCJs, debt management plans. They are prepared to accept applications from people who have had these things, subject to a little bit more checks. So there you have it. We now know that it is possible to get a buy-to-let mortgage with bad credit. We also understand the different types of bad credit that mortgage lenders are prepared to accept, and I've even given you the name of 3 potential lenders who might accept your bad credit buy-to-let mortgage application. So if you do have any questions or any ideas for future videos, please feel free to pop those in the comments below. Alternatively, you can send us an email, and the email address is in the description below. So thanks for watching. Please make sure that you hit the subscribe button and you turn on the notifications for more tips on bad credit and all things bad credit mortgage related, and we will see you in the next video.